Hey guys, Colin here with Main Street Wolf. And in today's video, we're going to be talking about Robinhood and these videos that we've been seeing pop up on YouTube about monthly dividend stocks. So, not that there's anything wrong precisely with monthly dividends or dividend investing, dividend growth investing, high yield stocks. But what worries me is the fact that we see these videos where people basically come out and just talk about their portfolio and how much they've made in dividend income. It's a little deceiving because honestly, anyone can make money from dividend investing if you have capital already. Putting these clickbait titles such as making $5,000 in investment on Robinhood, travel the world on dividend income, kind of BS. I got paid $781 with Robinhood dividends in March. You know, all this stuff may be true, or this how I made $5,000 I think is completely clickbait. The problem is it's a little deceiving towards the viewers. I just want to talk about how people should avoid investing in companies only because of a dividend yield. The problem with looking at high yielding companies and strictly basing your investments off of that is the fact that these companies and their dividends may not be sustainable. One, you may invest in a company that, let's say, has a 10% dividend payout and you're thinking, wow, I can double my money in 10 years even if the stock doesn't move, right? But with these companies that are paying high yields, usually that's actually a warning sign that either the dividend is going to be cut or there's something fundamentally wrong with the company. One of the things that people should look for when you are looking at a company and you see an extremely high yield. Let's, for example, just look at, I know AT&T is a company with a high yield. Not that there's anything wrong with AT&T. It's a huge company. They definitely have the cash flow to have a 6% payout. The reason there's a little premium there is because they have a lot of debt. But if we look at the statistics tab on Yahoo Finance and you scroll down, this is an extremely important number to look at, the payout ratio for companies. And it's something I always look at. If you see a company that has a payout ratio of over 100%, what that means is they're basically paying out more money than the company is making in profits. Obviously, if that's happening, you have an issue and that company's payout and dividend is not sustainable. So you have to watch out for that. Back to these videos, making money passively through dividends is true. You don't really have to do much. And there's a lot of great companies that pay a dividend. But in order to get substantial money from dividends, essentially live off of it, dividend income, like living off the actual dividends, you're going to need about $1 million. And sure, it's easy enough if I had $1 million. You just plop it into a higher yield stock that's relatively safe and large, a blue chip stock. And yeah, you can collect your 4% and make 40 grand a year and live happily ever after. But what I want people to understand is with these smaller accounts, investing in just dividend stocks is actually not the best allocation for people. So if you're younger, usually you want to take more risk and try to go for a little bit higher beta because you have more time in the market. With smaller cap companies or companies that don't offer yield, they can offer actually better returns over the long term compared to these large companies that have established cash flow. And sure, they may give you a dividend in form of cash. You can reinvest that and all that good stuff. You're actually throwing away future returns by investing in these huge companies. But I guess take that with a grain of salt because, as I said, that's if you're younger. If you're older and you're looking for more of an income to live off of and you already have a nest egg, it makes more sense to go for those companies that do have a higher yield, that they can support that higher yield, right? Companies like Apple. The other thing I want to point out is if you are doing these monthly dividends, right, and you're selling in and out of stocks after you get the dividend, one thing I want people to watch out for is actually the tax rate as well. Because what happens is if you're going in and out of these stocks, you may be taxed at ordinary income tax rates versus qualified dividend tax rate. You want the qualified dividend tax rate, but in order to get that, you have to hold stocks for a certain period of time. So the rules are if you basically buy a stock before the ex-dividend date, you have to hold on to that stock for at least 60 days from the time that you purchased it in order to get taxed at the qualified dividend rate, which is the long-term capital gains tax. If you're looking to maximize your taxes, You want to make sure that for your dividends, if you are trying to create a dividend portfolio, that you're paying attention to the taxes as well, that you're not constantly buying and selling out of stocks thinking that you're somehow playing the market by buying right before an ex-dividend date, collecting the dividend, and then buying back in, or just mixing around between dividend companies and getting the different dividends. But I just noticed this trend on YouTube. I keep on getting recommended for these videos that basically have people showing off their portfolio saying, hey, I'm making money while I sleep, which is true. I'm not saying they're wrong. I just think it's wrong to portray that going after just dividends is the only option for investing, just because that's not always the best allocation for people's money. Hopefully you guys learned some stuff. Takeaways, yeah, pay attention to the taxes. Make sure that you're not only investing for yield, and always look for that payout ratio when you're looking at the financials, because if a company doesn't have the cash flow to support the dividend, most likely that stock price will crash in the future, and you will also lose the yield. So be careful, guys, when you're investing. Make sure that when you are looking at dividend stocks that you pay close attention to the financials as well. Thanks, guys, for watching. If you learned something new from this video, please hit that like button. Consider subscribing. Here at Main Street Wolf, we're always talking cryptocurrency, fintech, and personal finance. If you like any of those topics, stick around, hit that notification bell. Thanks, guys, for watching, and have a great day.